Now we're going to talk a little bit about our experience at MarketSmith. Irusha and I both worked there for roughly 10 years together, and it's quite an amazing learning experience. It was just a place where you could learn about the markets, be immersed in it, be surrounded by people like-minded, which who loved the markets. I always said it was the best place in the world to work if you liked markets because it was 24/7 there, and the people that we got to interact with, and we'll talk a little bit about that. So, Arusha, what's some of your favorite stuff? Some of the lessons that you learned from working there?
Well, I think even before starting that, we probably should just mention that we were both customers before, right? We were using the services before it was Marksville. It was called Daily Graphs Online, and we were both customers. And I might have been the first one, I think, who came as a customer to work there, and so people thought I was crazy to do that. It's like, but it almost started a trend, right? You came, and then we had Scott Latone.
Yeah,
The Scott Latonin came afterwards, or
he came
after you, right?
before me. Scott
Oh,
already
we did
worked
come
there
before you.
before. Yeah.
Okay. So yeah, so Scott Latonin was the next one, and then you came. So it was kind of funny, but it worked really well because we started to having people who were already familiar with the product, who were really passionate about the methodology, and just wanted to be there and learn more. So we were in the perfect place, I think, as you said, Scott. So I think I think as customers, you're always wondering, what is it like to be on the inside? And so we had a chance to do that and really get a nice glimpse of it for many many years. So I think one of the things that I really learned is um, just how to kind of prepare during a bear market, right? Because when we came in, or when I came in, I think it was at the end of 2009, beginning of 2010. So we were at the beginning of a bull market, but it was not easy, and we were still going through some corrections there. But seeing at how a number of the portfolio managers would prepare, and they were looking at a lot of stocks, they weren't, and these stocks weren't perfect. I remember asking questions that, "Hey, this doesn't have an 80 earnings per share rating or 80 relative strength rating. Why are you looking at this right now?" Because they'd be looking at like 200, 300 stocks in their kind of universe. And the answers that I got back were, don't you want to, you might not have to buy it right now, but isn't it better to get familiar with it at this time, as maybe it's building a new base? And so by the time it completes a base, you're ready. You know whether you want to buy it or not. So kind of getting ahead of the game and anticipating, not necessarily buying it before, but you're prepared. So if it does break out, or if it starts to move, there isn't necessarily a hesitation. You can quickly move at that point and not have to learn the story when it's actually moving.
And to that point, Arusha, one thing I learned is that there aren't any secrets. It's not like
Yeah.
they had a better screen or a secret way to find the leaders. We were buying all the same stocks, and maybe we'll talk about Chipotle, one of the great stories that we have. But everybody in house was all working in separate places, doing their own thing, but they're all buying, recognizing the leadership with the same names. So it wasn't like, the portfolio managers at O'Neill and Company, their performance is so reliant on stock selection. Stock selection is important, but it's not the be all end all. Their outperformance was, a little bit of market timing, avoiding those really bad periods in the market, and concentration, in the ability to handle the leaders, to not only buy them right, but to hold them right, which is much harder than buying them right, because we can almost all see the cup with handle or the double bottom. But having the gumption to buy it there, get a position that's meaningful, but not too meaningful that you can't handle it correctly, and then hold it as it's moving and gyrating all the way up. I remember the way Bill held Chipotle. Scott used to tell us about Scott O'Neill, who was the president of MarketSmith at the time, and he'd tell us, his dad's still in Chipotle. It was just amazing to me
Yeah.
that his ability to really hold on to that, because unfortunately for me, I was long gone, the profit was burning a hole in my pocket, and so I was just so envious of his ability to his emotional aptitude to do that.
Well, maybe to talk about the 2010 breakout, right? Which was like kind of the perfect breakout of a couple to handle at a beginning of a on a fall through day. And so I think it was September 1st, 2010.
Yeah, so this is really, really new for me. I might have only been in there maybe a couple of weeks, maybe a little bit longer, but I was fairly new. And Scott came out of his office. His office is down the hall from where we worked, and he said during the middle of the day, "We're buying Chipotle." We meaning the portfolio managers. And Bill sat one spot of the company, and Mike and Charles and the other guys were somewhere else, and Scott was there by himself. So it wasn't like they all sat in this room and were screaming Chipotle's breaking out. They all were prepared. They all saw the same thing: the earnings, the sales, the story, right? Because at that time, me and you were going to Chipotle like 4 times a week.
Right.
It was like our go-to, because we started work so early, and our
They would
lunch was
open
like
at
at
10:30. I think they would
10:30,
open up at
right?
10:30, right?
So
Yeah.
so it was like one of the few places that was open that early that we liked. So you had the story, and we'd get there early, because if we didn't, we couldn't
Yeah.
get
The
back
other
in
big
time,
thing.
right? Because of the line.
The
What a
lines would really build up fast,
what a
right?
clue
Yeah.
that was, right? To
Yep.
the products and services, right? So everything was just right there. And I what I remember most about that is that there wasn't any collaboration. I think the reason Scott knew other colleagues of his were buying it, because back then they would phone in the orders. So they
Oh,
had a desk, right? And he'd call the desk and say, give me X amount of Chipotle, and the guy on the desk might, hey Scott, Mike's ahead of you, or Bill's ahead of you. Good luck getting filled today, right? Because there would be what's called orders ahead. So some of the guys, if they were the first to do this, they would get in there, get their order in first. So I remember thinking, wow, it was just and it worked. That's neither here nor there. It worked amazingly, but just the fact that they all had spotted the leader right there at that moment. And there was no hesitation, right? The other thing was, a lot of times people will say, well, how do you know it's going to be a fall today? Well, in the middle of the day. Because I remember
yeah.
this was probably
Yeah.
around 9 or 10 in the morning, our
Yeah,
time,
because of
Pacific
one of
time.
those rules, and you meant
And
you mentioned
you
it before, in the first segment, but on a falter day, you must buy something. So
yeah,
going to your question, how do you know it's gonna be a falter day?
Yeah, you don't, but at that moment, the stock's breaking out, it's got everything, and the market's up big, a lot like today. The market was up big most of the day. The volume is tracking higher, right? There's a risk and a reward to it, so you just have to put the pieces together and say, "This sure feels like a fall today," and you don't wanna be left standing, and even if you'd waited to the very end of the day, it wouldn't have mattered. Chipotle, I think it closed on the high, but then
Yeah.
continued to go and go and go until the earnings report, where it really gapped up, if I recall, and really made a big move. So that was one of the number of really ingrained in me stories that I remember. It was a really valuable lesson for me in the last 10, 15 years here from my own investing. All right, so Arusha, another thing that we got that was so valuable there was what we would call the huddles. So tell people about the MarketSmith huddle, right? Remember Scott would come
Yeah.
out and say huddle in 10 minutes, so
Yeah.
or if we were really quiet, if the market was quiet and everyone was kind of sitting around, he'd say, "Let's do a huddle," right? And we would have just an incredible learning experience.
Yeah, and especially during corrections where things would get slow, yeah, Scott would come out and he would come out almost he'd probably come out every day and do this, sometimes multiple times during the day, and he would say, "Okay, let's do a quick huddle," and he would go over, kind of market lessons, like, "Hey, pay attention to this. How many days are we in an attempted rally, or what stocks are setting up?" And we'd pull up a stock, and we'd all take a look at how it's building a base, or which stocks are hitting relative strength lines, or that are hitting a new high. So it was almost in many ways, and there's I want to say maybe this was during like 2011 or so, where it got, the markets were really tough, and so we weren't doing that much, where it was essentially a daily hour long type of lesson, right? Which was awesome, for the market junkies in the group. We loved it, because you just learning this in real time, or seeing a lot of these details in real time. And I remember a few kind of phrases that Scott would say over and over again in the huddles, like, pull up this stock and see how powerful this breakout is, or see how strong this move. And he would say, that's a sea change of sentiment, or boats don't have brakes, right? Meaning kind of like, with that Chipotle, that powerful breakout in September 1st of 2010, that the breakout was really powerful. The market was starting to move, and the momentum was able to just kind of keep going and going, and went a lot longer than any of us could imagine, except Bill, right? Because he's been through a number of these cycles and identified the leaders. So all these kind of little kind of details, throwing it at us real time, was perfect for us. We were customers, and we wanted to learn more about the methodology.
Yeah, and so Scott O'Neill, gosh, hundreds of huddles over a 10-year period probably.
Yeah,
And but also, the guys that were like rock stars to us that you saw in the hallway, and they're all amazing people, Charles and Mike Webster, but
right.
they're portfolio managers at William O'Neill, and you just think, wow, a little bit starstruck by all of them, Steve Birch and
Yeah,
them, and so you'd get to meet them and interact with them, and they would come and do huddles, and then I remember the first time we went to a meetup, and we had dinner with Charles and Mike
that's
at
right.
BJ's restaurant,
That's right.
we all sat around. I just thought that was the most
I couldn't
amazing
believe I was
thing
sitting
ever.
next to Charles Harris.
Yeah, exactly,
It was fun.
exactly. So it was really a great experience to learn, how these guys handled things and in the way that they did. And a few nuggets that I got from Scott per Bill, and Bill would talk to us once in a while, but mostly it was passed down from Scott. But he once said that Bill rarely got completely out of the market in a huddle, and I wrote that down, and I was a little bit floored because I always thought, market and correction, you go to cash, market and uptrend, pedal to the metal, you go 100%, if not more. And that was kind of how I traded too. It was full speed ahead, or full stop. And he said his dad would be probing always. So even if the market was bad, he might have a little bit of Apple or a little bit of Google, or in this environment, maybe he'd have a little bit of Nvidia, or a little bit of maybe some of these other semiconductor stocks that are acting so well. And they just gave him that feel for the market that was so amazing. So I've taken that to heart, and it's really helped me, especially in periods where I want to get bearish and get negative and get worried. And I always kind of think, well, let's have something. Let's have something in there, even if it's a 5% position. If a 5% position were to go down 10%, let's just say it got away from me, that's half of a percent on your whole portfolio, right? So you can survive that, and that's definitely been something that's helped me in the last 10, 15 years. And then the stock's not going to double or triple because of the chart. So the reason our charts look like they do is because that's what Bill wanted. He wanted a chart with earnings and sales and return on equity and fund ownership and proprietary rankings, et cetera. And that's like 80 to 90% of it. The other 10 to 20 would be the chart. The chart can help you to identify the entry. The other thing he loved about charts is it allowed you to look at hundreds and hundreds and hundreds of stocks. Back to your story, he'd actually look at thousands, probably a
Yeah.
couple thousand on the weekend, and whittle it down to a manageable level. So it allows you to see the whole market and then bring it down to a number that's manageable for you.
Yeah, and Scott, before we run out of the time in this segment, I just wanted to bring up one last kind of story here, which I think it was almost kind of the perfect way to end kind of our MarketSmith alone type of experience where we were our own separate company and then slowly started to get more involved with IBD. But it was when we did a trading summit in Chicago, and this was the first ever trading summit. We did trading summits all over the country later on, but we did this one trading summit and Scott O'Neill was the keynote speaker. And you presented, I presented, Justin presented, Amy Smith, and we all had like 20 minutes presentation where we kind of went over one concept and we went through a lot of animation of charts. And it was unbelievable how many people showed up to this thing. It was over 450 people. It was standing room only. It was always fire hazard, I think.
We had to
Um,
tell some people they couldn't show, and they
Over
were
100
pretty
people had to turn,
upset.
yeah, over 100 people had to be turned away
Yeah.
from the event. And just kind of the energy in that room, it was, I think, it still was probably the most memorable presentation. But that was kind of the beginning of the trading summits. And it was almost a perfect culmination of what Scott had taught us, and we shared with everyone else at that point, going over all these kind of lessons.
Really love those charts. I've been using them forever. There are a lot of things in the pipeline. The future is really exciting. We hope to take some things to the next level. And we have a great clientele who really care about the charts as much as we do. We're hard at work in the background. We really are working on some new features. So stay tuned. And we hope to have some really great updates in the future.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.